Talk a little bit about Bed Bath & Beyond. Absolutely terrible set of numbers coming through today. Are they investable at all? At all? Can anyone with any kind of confidence, following on from what we've seen?
Well, personally, I never really liked the store because I always found it to be one of the most disorganized places. You go in the store and there really doesn't seem to be any rhyme or reason. And I wasn't sure if that was just regional to where we live. But obviously now with the latest numbers that came out, the whole idea that they were planning this giant reorganization of their stores is now on hold because of their terrible earnings. And because they borrowed something like $600 million for corporate buyback, and they basically used all of that up with not a lot of profits on the horizon. So they're trying to do some things, some mergers with online commerce with the Bye Bye Baby and Harmon and a couple of others. But the meme stock thing that happened a few weeks ago was sort of a novel idea. It could happen again. But in terms of looking at the bones of the company, I can't imagine that would be where I would put my money unless I was just looking to catch some kind of a meme stock move. Say if it starts moving up from 6 to 650 to 7, all of a sudden you go, maybe it's catching some interest.
And ride that momentum. I wanted to touch on another stock that some people classify as a meme stock. Other people, perhaps more sophisticated, understand that this company, although depressed, is incredibly, I suppose, pertinent to the future, particularly as it relates to big data, and that's Palantir. Can you make the case as to, because it's absolutely in the doldrums in terms of its share price, but the upside potential?
Now, yes, I like that stock, and in fact, we put all of our clients into that stock right at around $7.60. And that's because, from a technical standpoint, you really have a pretty low risk. From an actual fundamental standpoint, they had renewed a recent government contract, and then today there was another announcement that they got $59.1 million from the U.S. Army for their big data, for their Intel apps. And so if anything is going to survive right now, that could be a really good opportunity to get in quite cheap to a company that is working in an area that's government supported. So it's not looking for corporate buybacks or private shareholders. It's getting the money right from the U.S. government. So I would say that's probably the best case for it.
Okay, we've got 30 seconds to go. I want to ask you about Kinross Gold, ticker KGC. Aren't you worried that, real yields could continue to track higher, the gold price can continue to get smashed, so it might not necessarily be the best time to get into these gold stocks?
I feel just the opposite. It's getting ready. Basically what's happening is inflation is taking a different turn. And this is what I think is going to catch people unaware. Everybody's looking at inflation in terms of the pure numbers of housing and wood and copper. But inflation takes a turn when geopolitics, when credibility, when all of this becomes topsy-turvy. And you can almost feel the unraveling, not just globally, but it could trickle here to the United States. And if that happens, you have an inflation unlike anybody's ever seen, maybe